Welcome back to the Financial Forecaster. Today we're going to be doing something that I haven't done yet on the channel. We're going to go through a full Wealthsimple TFSA portfolio. I'm going to show you what I'm holding. Sorry for the poor microphone quality, guys. It's all I got to record on my computer. Hopefully, when the channel starts to grow, I'll be able to put money into a microphone and I will be able to give you guys better comment. So let's head into it. I'm going to show you my TFSA Wealthsimple portfolio. My referral link is down in the comments. And you know what, guys? Wealthsimple, for all the good things and all the bad things, it's $0 commission. It's a great way to start getting into trading, and it's a great way to dividend invest for passive income and average down strategy. So let's get into it, guys. Let's get into my TFSA Wealthsimple portfolio. Here we go.
And welcome into my portfolio. Up 41% for the year. Super happy about that so far. This is my Wealthsimple TFSA. I want to say at the beginning, this isn't my whole portfolio. I also have a portfolio in my RBC account, both my TFSA and my RSP, but this is what I've been using since June for my daily averaging strategy, and I'm very happy with the performance so far. As you can see, there's been slow, consistent, safe growth with my contributions and my returns going up. I'm very happy with it. I'm playing a very safe strategy, and I'm hoping you guys are too. If you guys are following the meme stocks, or you playing anything speculative, or you're using Reddit, all the power to you. But the way I'm accruing my positions is a little bit different, and I'm very happy the way I'm doing it. So if anybody is interested in what's in my portfolio, we're going to go over it very quickly. So up 41% in the year. I have 27,000 there right now. So let's go down. I'm going to go over quickly when I'm up or down in each position, what there are, why I like them, and if I'm going to buy any more. First, Algonquin. Algonquin Power, renewables, great foothold in Canada. They're expanding in the States. Great management team, great dividend. They're growing it. They're growing their stock. It's value, dividend, and growth all at once. Up 19% in the year. I will still keep buying them. I'm going to hold them very long term. I love Algonquin, and they have a place in every Canadian utilities and renewables portfolios. Aecon, you've seen their trucks, you've seen their vans, you've seen their caterpillars, you've seen their construction on the side of the road. Canadian construction business, they've got a good dividend, a solid balance sheet, very boring company. They do infrastructure. It's nothing to write home about. I'm up 21% in the year. I will add, but only if they drop under $16 again. Aritzia, at this point, I think all of their growth has been priced in. I love that they're at 29. I really appreciate the 52%, but I will not be buying unless I see a dip, but I will be holding all my shares, and I'm very happy with the management of that company and the e-commerce growth they've shown quarter over quarter, especially coming since March. I think they've blown it out of the water, and I think if they start to move into other lanes, swimwear and lingerie, I think that they could have a definite long-term growth headwinds coming to them. Brookfield Infrastructure Partners, I chose Brookfield Infrastructure, pipelines, hydro dams, toll roads, 5G telecom towers, high barrier of entry, huge budget. This is a multi-billion, I think it's over a $20 billion market cap company. Good dividend, stable company. It's a little more shaky than most of my stable companies, but the growth is there, and Brookfield having that name on it, it's one of the best you can have in Canada. So Brookfield Infrastructure, I'm buying it anywhere under 66, up 15% on the year. I really like them. Bank of Nova Scotia, I think most of the price is baked in at this point. I think it's pretty fair value at 71. I'm up 27% in the year. I really wish I had bought some more at the lows to lock in that high yield. I'm going to wait for earnings to see what I'm going to be doing next. I think they're going to blow them away. I think the loan loss provisions are definitely going to be scaled back at Bank of Nova Scotia this year. I think that's going to add to the bottom line, and I think it's going to bump up that share price a little bit. But I can't be sure, so I'm not going to take that bet. Banks is a great. They take fiat money, they convert it, they take a fee that goes to cryptocurrencies. It's a great company. It's not even. I don't even know if it's a great company yet. I like the balance sheet so far. I like the business model, and I like the people running it. I've been reading a lot about the CEO, a lot of his interviews, and I really think that they got a foothold where not a lot of other companies have started to explore yet. So they're up 20%. They've been up and down. They're very, very volatile. So if you want to buy anywhere at 3, you might be going to, it was just at 2 last week. I was buying at 2, and I will keep buying in the mid 2s, but watch out for that one. That's pretty speculative. Chemtrade Logistics, you got to be very careful with this one. Unless you know what you're doing, this one can burn you. It's burned people in the past. You have to read the balance sheet very careful to know if this dividend is safe. I believe it is right now, and I've been just piping away the drip shares and increasing my position because I really like it. I'm up 56% on this position. I own a lot of it in my RBC TFSA, and I drip it monthly. I bought 3 or 4 shares. I like this company and the long-term headwinds that might come from a cyclical uptrend in the chemicals they make. I like it, but I would definitely dissuade people from putting it in their portfolio. It's not the safest one. Now, CT Real Estate, that's a safe stock. I'm up 12% on the year almost. I love this stock. It's just a REIT with Canadian Tire Properties, Sport Cheks, Markwork Warehouses, Canadian Tires, 100% occupancy rate, 99% rent collection. This is a solid company, great dividend, monthly payer. Definitely be buying at 15.55. I think that is a great price for this company. And in 2 or 3 years, easily it'll be at 20, and you're just going to lock in those yields and those dividend growths. Canadian Utilities, it's okay. I'm more of a Fortis guy. I started building up this position. I don't like their capital growth structure going forward. It's okay. I'm going to look to scale out of this position when I'm up a little bit on it. But, if you like Canadian utilities, you like Canadian utilities. Something can be said for the longest streak of dividends in Canada. But I'm going to look to be moving this money to another position. CloudMD, definite telehealth contender in Canada for the biggest telehealth company. They're moving into the States. They're just starting their mental health um, their mental health programs and their business models. And you know what? We'll see where that goes. I definitely think Well Health's a stronger company, but Doc has been making some great acquisitions. They're very smart with what they're doing on their balance sheet, and I definitely think that one is one I will be holding very long in my portfolio. I will not be putting any money into it until it's under $2.50, but I very much like Doc in this portfolio. Enbridge, I'm a little sour on Enbridge after all this Line 5 news. I think it's a little scummy what they're doing. I don't really like when I've been watching the lawyers and I've been hearing the cases. You know what? I'm going to keep these shares in there for now. I'm not going to be adding any more to my portfolio. I'm up 7% and it's paying me a hefty yield. If it goes under 40, I'm going to have to buy some, as bad as the company is, but that yield is fairly strong and it is stable and it is growing. These next two, I'm following the trends. I'm not going to say them out loud. You guys know why. They're up. I bought them a week ago. I'm riding the trend up. I don't know what the legislation is going to be. I'm going to try to swing them. I don't recommend anybody try to swing trade, but if you're going to swing trade, find something that's on a cyclical uptrend and just make sure to get out before the pants are pulled, if you know what I mean. Good Food. I've tried the product. I love the product. They own 40% of the Ontario market. I'm up 22%. I'll be buying under 12. This company has room to grow, same day delivery in Toronto. It's a food box company. It's fantastic. I tried it. I loved it. It was delicious. Fortis, man, what can you say about Fortis? It is, I'm down. I don't even care. I know that this is something I put in my back pocket. Dividends are going to grow. The capital growth and investment for the future, the dividend almost guarantees, it's almost a guaranteed dividend. It's beautiful. It's safe. It's stable. Everyone should have it in their portfolio. Their earnings are on Thursday. 51.70 is a exceptional price to get it at, in my opinion, as someone who's been watching it every day. Fortis is great. Granted, best industrial REIT in Canada, balance sheet wise, management wise, international. They know the clients they want, they know the spaces they want, they know the contracts they want. They are getting it done. There's room for dividend growth. I love this company. $76. If you're going to start a position here, you will be happy you did so in 10 years. I guarantee I'm going to be happy. I'm not going to guarantee. I'm not a financial advisor over here, but I'm very, very confident. HEO, the cat's kind of out of the bag on HEO at this point. Everyone's starting to cover it. I'm up 60% myself. I very much like this company. I hope it can continue to grow. I hope it has the ability to be as sustained as they want. Like everyone's seeing massive growth. I hope that they can support it within their infrastructure to do so. I hope that they can expand at the rate they need to justify the valuations that everyone's putting on them. I really like them. I like what they do, and I like where they're going with their contracts. So good for them for being a change in the world for the good. Kits is a online. Oh, and if you didn't know, HEO, it treats water pretty much. It's trying to address a need that the world is going to need, and they want to be at the forefront of that. Kits is a online. You try on your glasses online. You order them online. Right now, you can get a free pair. You just go in, pay $10 shipping, get a free pair. You try them on through their augmented reality app on your phone. Very cool. I tried it out. I liked it. I'm gonna probably get a pair of eyeglasses from there. But the management is stellar. They all have tons of experience in their fields. They are all heavyweights and they know what they're doing. This has been on the market for a week. Don't know what it's going to do. Completely speculative, but I really like the disruption in the market they're getting into. Kirkland Lake Gold, 5% of this portfolio. You guys know it, 5% precious metals, whether it's a streamer, an ETF, a miner, you're buying bullion, 5% should be in precious metals or cryptocurrency, what have you. I have my 5% right here. Very happy with Kirkland. Definitely, if there's a downtrend in the rest of the market, I'm very happy to see what happens to gold. We will see what happens there. Lightspeed and Nuvi. We've had a competition with these two. Right now, especially with Lightspeed's earnings just coming out, Lightspeed's topped out over 100. It's been on a slow decline. We're going to see where this price holds. I've been taking profit. I love this company. I think it's very overpriced here, but it could keep going up. You never know with tech. I love it, but $93. I'm up 174% on it. It's getting a little dangerous for me, especially with no dividend, guys. You know I'm a dividend guy. Nuvi, there's more room to run with this one. I think it is also another great company in the fintech space. Whether you're going to have PayPal, Square, Mercado Libre, Shopify, what have you, you need to be in the fintech space. Even if you're in Kathy Wood's ARC F fund, you want to have fintech exposure of any kind. So Lightspeed and Nuvi are the ways I'm playing it. I'm skimming off Lightspeed. I'm putting into Nuvi, but only into Nuvi under 70. Kraken Robotics, robots, batteries, underwater explanation. That's all I got for you guys. I like the company. I like what they're doing. I think they're cool. I'm not, throwing the baby out with the bathwater with this one. I only have $680 in it. I'm down in my position, but when this thing moves, I think it's going to move very fast. Ryokan, commercial, shopping malls, mixed residential units. This is a great REIT, great, very well managed. I think management made a very smart idea cutting the dividend. They're going to have all this extra, over $100 million extra a year to buy new properties, find new tenants, diversify their holdings, and really strengthen up their FFO. I really, really think that this is a great position. Don't let that dividend cut fool you guys. This is a very strong company. Going forward, they're going to be still very strong. Sun Life Financial, boring, just like Manulife in Canada. It's a big insurance company, but this one, just like Manulife, large Asian footprint, fantastic. But Sun Life itself is going very heavy into the Japanese market, and I think that's a very smart idea for further capital growth. I'm going to keep putting into Sun Life. Very stable, great dividend. It's growing, fantastic. Summit Industrial, I don't know. I was gonna build a position, but as I learned more about the company, became more boring. Wasn't super excited on the management. I'm probably gonna liquidate this position until I decide when to do that. I'm just gonna keep taking in the monthly dividend, and that's all I can say about Summit. I'm not very bullish on Summit, but I'm happy to have it at this amount of shares, and that's what I'll do with this company right now. Telus Telus has to be the biggest bullish position I have. I've covered Telus on my channel a couple of times now. They just partnered with Google. They've got multiple businesses, all separate, all with verticals on their own, all that can be Telus, if you want to look into something, is going to beat Bell. It's going to beat Rogers. I'm calling it on my channel. I think Telus is the bee's knees, honestly. They're aggressive dividend growth, and it's completely within their means. I really like Telus. TD, same as Bank of Nova Scotia, I think they're fairly valued. Great yield. I wish I had more. I wish I had bought more at the lows. I'm buying it anywhere near $71. I don't know what I'm going to wait to see what earnings say. It all depends on the economy. It all depends on the recovery. We'll see what happens with TD. VitalHub, now, this is a gem. You have to look into VitalHub. They deal with the data from healthcare professionals to the government, putting them together, analyzing them, dealing with the transfer of this data. It is a gem that's not going to stay under the radar very much longer. I'm happy to average up in this company, but I think in the whole telehealth craze, VitalHub Corp definitely got looked over, and I don't think that's justified at all. I really like this company. I'm going to continue to average up because I think this company is going to slowly snail crawl until, excuse me, it gets some eyes on it. VRE, only ETF I have in the portfolio. REITs, you guys know, I think REITs have a bright future ahead of them. This one holds the best mix of REITs that I like. That's why it's this specific ETF. No other reason. It's not because the management fee. It's not because it's Vanguard. It's because I like the mix in the basket of stocks within it. And that's why I'm holding it. Only ETF in my portfolio. We have Well Health, obviously backed by Li Ka-shing. It has great management. It's pushing into the States. Its acquisitions have been monstrous in the quality of the companies it's getting, the what they're paying for it in premium versus the EBITDA it will add to their company. Well Health is something I'm glad that's in my portfolio today, tomorrow, and in for 5 years from now. This company is going to be a monster gainer. It's already up 133%. I'm very excited about that. And Zebic Assortion, last but not least, well, kind of least, I've just added it. I have some in my other TFSA. They're making means for the future to adapt better to climate change, to the the power we're using. They're the means to do that. And I like the balance sheet. It's ran up a lot. I'm watching where it's at. I'm going to continue to do my research on it, but I really like this company. And and that's it, guys. Thank you for looking at my TFSA and my Wealthsimple. If you'd like to get your own Wealthsimple, I'm gonna have my referral link down below. But no pressure. If you liked my picks, give me a thumbs up and subscribe. If you didn't like them, give me a thumbs down and tell me why I'm dumb in the comments. Either way, I'd like to hear from you guys. Thanks for looking. This is the Financial Forecasters TFSA in Wealthsimple. I'm up 41%. Not so shabby. Thanks for sticking to the end of the video. So have a good night. It's the Tuesday night. This will obviously all change. I'm posting this on Wednesday, so let's hope I'm not down to 30% up tomorrow. Have a good night, guys. Keep it calm, make money, let's get rich together. Financial forecaster.